Hi guys, it's Philip Wong here. I got another question posted to my Facebook wall, and that was, what is the connection between positive accounting theory and agency? Now, I'm going to give you some background first. Now, every theory is based on a number of assumptions. Positive accounting theory, and that is capital P-A-T, was first developed by Jensen and Meckling in 1976. The link to their original papers is in the description below. Agency assumes that there is a relationship between two people where one person, the agent, is basically doing on the work for and on behalf of someone else, and that is the principal. In most accounting courses, we usually just think of these as being the shareholder and the managers. In fact, there are many types of agency relationships. You can see I've done a video on this previously. Have a look at the links below. Now, Ross Watts and Gerald Zimmerman built their ideas on these influential papers, and they wrote their papers about positive accounting theory in 1978 and 1986. Again, links are below. They were more interested in the accounting decisions that managers would make given the pressures and the various circumstances that they were placed under by the principals. In order to look at this relationship, they just merely borrowed theories of agency. Now, why go ahead and invent your own theories about the mechanics of human behavior when there are perfectly good ones that you can just already use? So we can see that one theory will just assume another theory and be based on top of that. In fact, agency theory assumes that all human behavior is economically rational. And this idea of rationality has a whole host of authors going from Friedman all the way back to Adam Smith and beyond. And it's really not a stretch of imagination to assume that most managers and most shareholders are going to be greedy. The thing is that the foundations of any system, well, if they're going to be a little bit wobbly, then all of the structure on top will also be a little bit unstable. There's plenty of research that questions whether humans really are as economically rational and as greedy as we assume them to be. I think some of the economic models that we use are just mere oversimplifications of the real world. They're caricatures, and they're useful for understanding the key elements, but sometimes they can be dangerously short of the details. We need to imagine the world complexly. We need to question the assumptions that go into all of these theories and models, and we need to be very critical of our own ideas. This complex thinking will not only improve your grades on the examination, but they'll make you a sharper business person, and they'll make you a better human being, and basically less of a jerk anyway. Thanks very much to Catherine Ong for posting this question on Facebook. If you have any other questions on accounting, you can always tweet me at Tetracarbon, or you can post them on my Facebook wall. Thank you very much, Catherine. The link to that, of course, is in the description below. Happy study, guys.